Okay, it's recording. Hey, Renee, how's it going?
Hey, Amy, it's going great. How about you?
It is going good for me too. I mean, I'm loving this weather. This is awesome.
Oh, for
This
sure.
is
Wish it would
my,
stay like that year round.
yes, I love going outside. I mean, it's just,
Mhm.
I live out in the country and I like going out and hanging my clothes up for real.
That's awesome. I don't do that, but that's awesome.
Yes, I know people who live in the subdivision, they can't do that, but I love being able to do that and go outside during this time of year.
For
Go play,
sure.
take a book out there or whatever.
Yep, yep.
So it's been a little while since we had time to chat. So I'm so happy to have you back on here.
Well, thank you. I'm glad to be back. Hopefully, we can give some helpful tips to people that are looking to get pre-approved to buy a house.
Yes, and with the shift in the market, both on buyers and sellers, I believe that especially our buyers really need to be diligent and make sure that they follow all the rules and everything, especially if they're getting a mortgage so they don't lose that pre-approval. Because as we were speaking about earlier, I had a listing a couple of months ago where we got almost to the finish line and the buyer lost their pre-approval and it was just a bad situation. It was heartbreaking and we don't want that to happen. So I thought what we would talk about is something I have seen floating around online before. And I've actually grabbed this and started using this in my emails that I send out to my buyers. And it's the 10 commandments when applying for a home loan. Now this is more about really once you're under contract. These are things to do and not to do. And some of these are obvious. Some of these are not so obvious. And I thought it'd be great if we could kind of go through these one by one and kind of explain why these are important because they may affect your debt to income, they may affect your credit report, credit score, and we don't want anything like that. We just once you're under contract, you want to fly under the radar, right?
That's right. That most definitely, most definitely. This is actually a very good list. It was a great idea for you to add that to everything you send out because, as you said, people just don't think about that. They're living life, they're busy, and if something happens to their car, they think, I'm just going to go buy another one. They don't
Right.
realize how things like that affect their
Mhm.
pre-approval, and definitely does.
So the first one says, don't change jobs or become self-employed and don't quit your job. It should be obvious, but let's.
Well, it is, but again, people are living and they don't think about that. We live such fast lives and people just do what they do and don't think about it. And yes, I mean, as far as changing jobs, what I would say on that particular thing, we have situations where it has happened. Okay.
Mhm.
But always call your lender first. Anything you're doing, no matter how minor it is, call your lender and just say, hey, this is what I'm looking at. This is what I'm looking at. It's a huge opportunity. Um, the lender will get all the details and we can say, yes, you would be fine, or no, you have got to wait till after you close your mortgage. So I advise people, I don't care how minor it is, you're never bothering us. Pick up that phone and call, tell us your intentions, and we will tell you whether or not we think you should move forward with whatever it is you're looking to do.
So don't have a knee-jerk reaction that your boss made you mad and you're going to quit that day. I
Please
would
don't.
please wait until the day after closing if you need to.
Yes,
Just
yes,
hang in there, if it's something like that, because
most
otherwise,
definitely.
yeah.
Yes, most definitely.
Because if you
Um,
are already under contract, then you probably had an inspection you've paid for, maybe even had an appraisal, and you're not getting that money back. And you may not even get
Correct.
back your earnest money.
That's
So,
right. That's
you
right.
know, there's always going to be exceptions where things happen. But, if you're just having a bad day, I would say if you could hang in there until after closing.
That's right. Exactly. Great advice.
And then the next one, buying a car, truck, or van, or you may be living in it. Okay, so that's a little lighthearted, but go and buy a car or a truck or van, or let's say tractor, four wheeler, anything like that you're going to finance or you're going to be spending your down payment, closing costs money. you may have issues, debt to income, or you may not have your money anymore to close, right?
Most definitely. A couple of those. Um, yes, buying vehicles. We have situations where people, it's an emergency, like theirs breaks down, or, they just have to. 9 times out of 10, again, we've told them just call us, let us know how much the payment's going to be, and let us look at your debt to income ratio and make sure it can absorb that payment.
Mm-hmm.
Because when we pre qualified you, we didn't use that new payment. And what will happen is when you get towards the end and you're close to closing, lenders have to do a soft pull on your credit to see if any new debt has been incurred. And if it has, of any kind, we have to put that in your debt ratio. And if it throws you over the debt to income ratio limit, you're no longer approved. So
I
it's
actually had this.
huge.
Yeah, yeah. Dallas had a listing about 3 or 4 years ago. This actually happened on. The lady had gotten a pre-approval, and she bought a. We weren't representing her. Like I said, my husband had the listing, and she bought a car. I think it was about $15,000 or $16,000 car. Either the day she applied or maybe the next day. Either way, she had gotten a pre-approval letter from a well-known, reputable mortgage originator in the Montgomery area. But then it popped up after the
Mhm.
home inspection had been done. We were about 3 weeks into the contract, and that popped up, and then it put her out on the debt to income ratio, and she wasn't able to move forward on buying that house.
Yeah. We see it happen, believe me, and
Mhm.
again, not that it's intentional. In some, like in her case, more than likely, what happened is, she thought the lender would have saw it when they pulled the credit report, and we do try really hard, or we make it a point to look at all of the inquiries on the credit report for things just like that. But sometimes it's missed, it just is. And if we see new inquiries and we don't see a debt on the credit report to match that inquiry, we'll call the buyer, hey, I see you have this inquiry, did you buy a car? And of course at that point she would have said yes. But it in situations like that, it is easily missed. So I can definitely see how it could happen. But yes, if I mean, you're talking about anywhere probably $300 to $500 payment makes a huge impact on your debt to income ratio and the amount of home that you would qualify for. So be forthcoming when you do an application on
Mhm.
anything, any changes you've had, anything you've purchased, because a lot of times if we find that out up front, we can figure out ways to work around it or fix it or make it work. But if we don't know and it pops up, then it's too late most of the time. So, but yeah, that is exactly what happens, and it happens a good bit.
And the same thing kind of with number three, don't use your credit cards excessively or let your accounts fall behind. So increasing the amount that you owe on the credit cards is going to increase your minimum payment, which affects your debt to income, right?
Correct. That is most definitely right. It will do both.
Mm-hmm.
And not many situations too, but in situations where your credit report might expire before you close, there are situations if it's new construction or just different scenarios. But let's just say you're closing on the 15th of December. Well, your credit report maybe expires the 1st of December. Well, that lender's going to have to pull a new credit report. So if you've maxed out your credit cards, your score has come down without a doubt. And then that's what we have to use is that lower score and hope and pray that we can still get you approved. So it's really important, if at all possible, try not to use credit cards, use lines of credit, use anything, because when we pre-qualify you, we're looking at exactly what your credit is that day. So any little change could cause your scores to come down, it cause the amount you qualify for to buy
Mm-hmm.
less. So yes, if at all possible, don't even touch your credit as far as anything.
And also, you cannot go and get one of those credit card advance. You got to get those checks in the mail. all the time.
Mm-hmm.
You can't
Yeah.
go and get one of them for your down payment or for closing costs and all, right?
Correct. You cannot do
Yeah.
that. The only way you can get a loan for your down payment or cost is if it is a secured loan, meaning maybe you had a car that's paid for and you go to the bank and they give you a loan against the value of that car. So
Mhm.
that loan is secured by that car. You have to qualify with that payment, but that's the case of where you can get a loan for
Right.
your down payment and closing cost. But
And
that's
this
the
is
only case.
right. And this is where if you're buying a home, you've got to communicate with your lender because they can tell you what you can and can't do. Don't go rogue.
That's
Don't
right.
do wrong. Don't, because your uncle, well-meaning uncle said, "Well, I did this before." His situation may have been completely different.
Oh, for sure. Every single situation is totally different. And again, they're like, well, we didn't want to bother you. Please bother us. Always, I don't care how minor, call your lender, run it past them, let them tell you what it could change, what it could affect,
Mhm.
and if it's a good idea for you to do it or not before you do anything.
It is less of a bother to ask up front, and I think that people in general are scared to ask questions because sometimes buyers will come and ask me the questions, or they'll ask their real estate agent. They're afraid to, like, if
Mhm.
they go and ask their loan officer, they're going to lose their approval. No, you're asking. If you already gone and done it, well, we may need to have a discussion then. But if you just ask, that is way less of a headache than if you
Yes,
go
ma'am.
and do it. Right.
No doubt. No doubt.
And the same thing with number 4, spending the money you set aside for closing. So that would be the down payment money and the closing cost money. If something happens, like you said, life happens. Maybe, your transmission goes out in your car or something like that. You kind of need to tell your loan officer, like, hey, I've got to go spend $1,000 on tires out of this money. What is this going to affect me? What do I need to do? Or how can I get this done and still buy
Yes.
this?
Yes, still call your loan officer.
Mhm.
Because we verify that money up front, but you may not close for 2 or 3 or 4 weeks later. And if we get down to, we call you and say, okay, this is your final number you need for closing. And you're like, oh, well, I had to spend $3,000 on a transmission or whatever. Well, where's the rest of the money going to come from? It becomes a challenge because the money can't just come from anywhere. We have to document every red cent, and it has to meet guidelines per FHA and the other loan programs, guidelines that they have set in place, that it can only come from certain sources. And I will say that's probably one of the most difficult parts of our job is funds, because they are so strict on literally every penny. So
And they
yes,
may
that is
not,
huge.
and they may be thinking also that, well, maybe I could just finance in the closing costs or something like that.
Right, right, and yes, that doesn't work either. There is a one or two loans you can finance in. Some of it maybe if you qualify for the amount, but if you're pre-approved, as in we see your documents and we say, okay, you need $15,000 for your down payment and your closing cost. That's all. That's what you're pre-approved on, is what you've provided us and what we have verified. That can't change. Now after closing, you do what you want, but when we get down to the end, we have to verify that you still have all of that money,
Mhm.
and that you can bring a cashier's check for the amount needed to closing.
They still need to provide updated bank statements along the way.
Right, right.
And then number 5, I think this can be a tricky one. Don't omit debts or liabilities from your loan application. Um, so I guess that was actually meaning leaving off thinking that you won't find them. But then when I initially read this, I was thinking about, I've had conversations with potential clients where they would tell me, well, I'm going to go pay off my car. I'm going to go pay off this. And I was like, wait, let's talk to a loan officer first before you go and close out an account because your credit score is going to drop more than likely.
Mm-hmm. Mm-hmm.
And I've had some of them that they insisted they knew what they were doing. They were going to go ahead and do that. But so maybe you can tell why you might not want to go pay a car off right then, or other than aside from spending the money they have. But let's say they have the money, why not pay off the car? Why not pay off the credit card?
Very good. That's a very good. That's a very good point. Yes, even when you buy a car or you pay off a debt or anything, most of the time your credit score goes down before it comes back up. Okay, so just like I mentioned before, when we get to the end, right, not very close to closing time, we have to do a soft pull on your credit. And if your score is dropped drastically, underwriting is going to want some answers, number one. So yeah, I mean, unless you've been advised to do that by your loan officer, you can at least wait 30 days or however long it is until you close to do it. So I just, again, even though it's a huge, that's awesome. If you can pay that off, that's awesome. But just wait until after you close. You need to make as little changes as possible to anything to do with your credit and your finances that you can until after you close. Because yes, 9 times out of 10, your credit score will come down before it comes up.
Because your pre-approval is based on the snapshot at that point in time of your income and your credit score and your current debts. So making any changes to that, you would think that, hey, like you said, paying off a car might be great. What if it drops your score too much?
Correct. That's exactly right. Again, it doesn't matter how minor or how good or bad you think it is. Your loan officer is right where you need to go.
Yes, absolutely. You need to be best friends with your loan officer. Once that contract is signed, best friends.
That's right. We need to know the good, the bad, the ugly, because we can't work around it or give you suggestions on how to fix it if we don't know. And then if it pops up out of the blue, it just causes a lot of chaos.
Yeah. And don't be embarrassed or anything to ask questions, even if you think they sound silly or, like you said, they don't want to bother you. Ask the questions, because we want to get you into that house. We don't want you to be disappointed, because that's the worst.
No, for sure. When you're disappointed and the person's house you were buying is disappointed, and it's just not a good place to be. Trust me. It is not.
Number 6, this is a little fun, because people don't realize if you go to these furniture stores or appliance stores that advertise 90 days, same as cash, 6 months, no payment, guess what? They still ran your credit. Am I right?
They ran your credit, and we still have to count a 5% payment, regardless. Even if your payment is 0, we have to count a 5% payment. So you have to qualify with a 5% payment monthly.
Wow.
Yes.
And I'm sure people who have lost their loan because of buying $5,000 worth of furniture.
Oh, yes, ma'am. It happens.
I don't think I've had that on the furniture. I've had that on the car, but not on the furniture.
Right. And the same goes for student loans. A lot of people don't realize that even though they're in deferment and they're on your credit report, it says no payment due, that does not matter. The government requires us to count 0.5% of your total amount of your student loans as a monthly payment. Or if you're on an income-based repayment plan and you can provide us a letter that says $10 or $20 or $30 a month, we can use that. But if it's in deferment, it's going to have a 0, which means you're not on an income-based repayment plan. We have to count 0.5% as a monthly payment every month on your debt ratio.
So if you have $50,000 worth of student loans, then that would be $250.
That's a $250 monthly payment.
So if you're not making it, you're still having to count it.
Correct.
Right.
Yes, ma'am. And again, most people do not realize that, because they're like, well, it's in deferment. But again, our government they require us to do that, because they're figuring at some point you're going to have to start making that payment on top of your house payment. So they want to go ahead and address it up front. So when the time comes, you're not in a bind and you lose your home because of that big payment. you know.
And it used to be 1%, wasn't it?
Well, it did. It did. It's Fannie, let's see, excuse me, FHA, I think Freddie and USDA count 0.5%. Fannie Mae, a lot of time, well, if we can get the letter on the income-based repayment plan, we can use whatever that payment is instead of the 0.5%.
Okay. All right. Gotcha.
So it's pretty
So
across the board, but it's always at least 0.5%.
Yeah, so that's if you got student loans, that's definitely something to dig deeper into with your loan officer.
Most definitely. Most definitely.
Yeah. All right. So let's see, where were we at? We're on number 7. Do not,
Yes,
which
ma'am.
kind of goes along with number 6 in a way. Originate any inquiries into your credit. So don't even, check into getting the furniture if you don't buy it.
Correct. Because, inquiries, yes, they can pull your score down if you have too many. Or I have seen a perfect example would be if somebody did go car shopping. When you go car shopping, they're probably going to pull your credit for 5 different lenders because that's what they do to try to get you the best rate loan, for your situation. So if you've got 5 inquiries all of a sudden from this car place, and then you go to another car place and you got 5 more, it can rapidly drop your credit score.
So don't even
yes, keep your inquiries at a minimum.
Yeah, even if you saying I'm not going to buy right now, just don't do it.
Correct. Not until after you close on your home, because your home is the most important thing. So
exactly. So number 8 and 9, these to me are not as obvious as some of these other ones about, stay on your job, don't spend your money down, don't, run up your credit cards. But 8 and 9, don't make any large deposits without first checking with your loan officer, and don't change bank accounts. So I think these are ones that people may not quite understand why they might cause some issues. So, tell us about that. About
you are correct. Yeah. Most people do not, when we go to people with these situations, they do not understand why. Just because, like you said, it's just not that obvious. You just don't know. So the reason being is, again, lenders are required to show where every single red cent of this money comes from. Okay. So for example, now that, we have Cash App and Venmo and all that, all those ways to transfer money back and forth between people and their accounts. Well, let's just say somebody Venmo'd you $1,000. That might as well be it's cash, basically, is how it's considered. Okay. Well, you cannot use cash per se to purchase a home unless we can document where it came from. Meaning, let's just say you sold a car for $1,000 and they Venmo'd you $1,000 for that car. Okay. Well, it doesn't stop there. So we have to get the Venmo statement. We have to get the bank statement showing where, of course, it was Venmo'd into your account. We would then have to have a bill of sale for the car, the blue book value for the car. Like when I say everything has to be documented to a T, it has to be documented to a T. So if you have a bunch of different, cash deposits here and there, or Venmo or PayPal, it still has to be what's called sourced. And it has to be a source that is allowed by that loan program. FHA allows these sources of funds. It can be a gift from a relative, of which requires a gift letter plus a 30-day bank statement from the gift owner proving they had the money to give. Meaning that they can't just go get a loan for $3,000, throw it in their account and give it to you. Because we have to go through their bank statement and source those funds also. And if it's not sourceable, we can't use it. So, and again, that is definitely one of the toughest parts of our job, because that's how serious they are about documenting all the funds to make sure they are coming from sources that are allowed by the government.
I was talking to a prospect one time that she had been under contract to buy another home, but her father had given her a down payment gifts funds, but he didn't want to provide his bank statements, and it fell apart.
Happens a lot. We try so hard to pound that into people's head up front that
Yeah.
this is very important that you know and understand this and discuss this with your gift donor before the fact, because there is absolutely no way around it. None. And they're like, what, how do I explain it to people? It's like, look, do you really think we would want to do this if we didn't have to? I mean, that's how serious they are, that the funds are coming from legal sources, basically. But
Okay.
yes, we have to source it. We have to have the gift donor's bank statement.
Got to have that, see that paper trail where it came from.
Correct.
And well, now what if somebody just left it in their Venmo account, didn't put it into a checking account? Then it's not coming through, right? Or
same. Either way, it has to be sourced. It doesn't matter. Yeah, it still has to be sourced, and and what we are seeing a lot these days is, people have side jobs or side gigs, as they call them, where, they're paid cash or paid, how it, but here's the government's ruling on that. If you don't pay taxes on it, we are not going to allow you to use it to buy a house. Well, that's cash money, and you don't claim it on your tax returns, so you cannot use it to buy a house.
They can't even use it for your down payment or
correct.
Closing costs. Okay.
Unless it has been, now if it's been in the bank for 2 months, and then we get 2 months bank statements that are clean without those deposits, you just have to wait that 2 months.
Yeah,
because it has to be seasoned for 2 months.
Okay, so what about changing banks? Why is that a kind of a no-no?
Usually there are paper trails. I mean, you can still come up with a paper trail on that situation. We would have to get your bank statements from your old bank and your new bank. It's just, unless you want to have to go through a lot and get a lot of paperwork and documentation, I would advise that you wait until after you close.
It really just kind of adds more work for everybody.
Yes, ma'am. Yes, ma'am. Pretty much any change is going to add anything like that. It's going to add a lot more work, paperwork, confusion, frustration. So, yeah.
And it's already confusing and frustrating, especially if you're a first-time home buyer. So that's why we wanted to go through all these and make sure everybody knows, do this, don't do that. So we got the last one. Do not co-sign a loan for anyone. That goes on your credit. You are on the line for that car you co-sign with your son, niece, nephew, whatever.
Yes, that is probably one of the best of the 10. Yes. I cannot tell you how many times we see this. It is constantly. And people just tend to think that, well, but I don't make that payment. The only way we can not count a payment against a buyer in that situation is if, number one, they do have to be a co-signer. They could not have just bought it for their son and let them make the payment. It has to be a co-signer loan, and we have to be able to get 12 months bank statements from that son documenting where that money has come out of his account. Now, if he's only on the car for 6 months, it will not work. It has to be 12 full months.
That kind of goes back to also if you get gift funds from somebody and then have it supply their bank statements. So it's the same type of thing. If you want to prove that your son is actually making that payment that you're co-signed on, you got to be able to get his bank statements
for 12 months. Yes,
12 months.
That's exactly right. And again, that's more paperwork, more confusion. It just and if you can't provide that, we have to count that payment against the buyer. I've seen people with 3 or 4 different car loans on their credit. They're not all theirs, but they may have bought one for their son, bought one for their daughter, but they let them make the payments. But even in that situation, if he bought it for the son and the son is not a co-signer, it doesn't matter. We have to count it against the buyer.
Yeah.
And people, like you said, people don't know what they don't know. So they just assume, hey, I don't make that payment, so I'm not, it shouldn't be counted against me, which, I get that. But again, there's just always guidelines and certain criteria that lenders are required to follow on every loan program. And there's just no way around it.
And also, I guess if you've got somebody young who doesn't have their established credit, co-signing might be good, but it's really risky to do business like that with family members. I just want to throw that out there.
Yes, ma'am. I have seen it ruin people's credit. I've seen situations where, there ended up being repossessions and things like that because of the person that they either co-signed or bought a vehicle with. So, I know a lot of parents do that for their children, and that's great. But only do that really if something happens and they can't make that payment, you can afford to. Because if not, it's your credit that's going to be ruined, so.
Yeah, it doesn't matter if your relative was supposed to be making the payments. If it gets repossessed, it's on your credit.
Correct.
And I mean, yeah, that's not fair, but that's how it is.
Yes, ma'am, that's
It's
correct.
unfortunate, but that's just how it is.
It
So
is.
tread carefully with that one.
Yes, very.
If you're not buying a house, please tread carefully with that one.
Yes, for sure. For sure. Just again, ask your loan officer. Doesn't matter. Most everything will be uncovered. There is not, like as we had a situation where someone had child support and they didn't intentionally not put it on there. They just didn't think about it mattering. Well, it was $1,000 a month. Well, that threw him out of qualifying for anything, and it comes up again. There's not situations where, it's not going to come up somewhere, because it's either going to be on your paycheck stub, it's going to be in your bank statement where it comes out of your account and we have to know what it's for. Or if there's a divorce situation, we might have to request divorce papers, which is going to be in there. Things will come up, but if loan officers know about it up front, it just saves you a lot of heartache, finding out, instead of finding out later that you can't do it, up front what your challenges are and, what you could qualify for with it. It just makes it easier all the way around if we know every single little thing, no matter how minor you think it is. If we know it, we can try to find a way to work around it or make it work. And if not, then you would at least know up front and move on, but just honesty, just any little information you think could even matter, share. Please share.
Yeah, I had a buyer one time that I think he had probably been divorced from his first wife, I don't know, maybe 10 years, and the loan officer asked for a copy of the divorce papers, and he asked me, why do they need this? And I said, well, they're probably looking for child support or alimony just to make sure. I mean, he had none, but they had to check that.
For sure. Most definitely. In some situations, we don't have to ask for those documents, but there could be something on the credit report that might cause it to be asked for. There can be just different things that could require those documents being provided. And then that just opens up a whole new can of worms. So that's why it's just important to share everything up front. Any debt that you have that's not on your credit report, let us know about it, because that's the only way we can help you.
All right, Renee. Well, have you got anything else you can think of, or we're about ready to wrap it up for this week? I think this has been a great, very informative webinar. I hope everybody has a chance to watch it. If you don't catch it live, we'll have there'll be a replay of it, and there's a lot of good information here. Even if you're not ready to buy right now, Renee is a fabulous loan officer that I like working with people like her, who's willing to help people make that plan to get ready to buy. Because with the season that we're in, with the economy, with interest rates, you want to make a plan. You want to know what you need to be doing and not doing. And working with somebody like Renee and help keep you on track so that, I mean, we're going to be here, whether it's 6 months, a year, or even 2 years. I mean, I have a buyer right now. I first spoke to her October 2020, and we took
Oh,
2 years, and she came back, which is great, and I'm so happy
mhm.
for her.
That's awesome.
We'll be here.
Hmm.
If that's your future plan, I wouldn't be waiting on the interest rates to go back down to what they were a year ago. I'm sorry, people. I think that ship is sailed, but buying a house builds wealth.
Yes,
And
ma'am.
and like I've read before, if you're renting, you're paying 100% rent or 100% interest rather. You're
That's right.
not you're not investing into anything. So if you can start on a plan to stop renting, Renee is someone that's fabulous on helping you get there, tell you what you need to do and not do. So her number is down there along the bottom. My number's down there. Reach out to us. We'll be happy to help. Just tell you, give you guidelines, get you on that road.
Mhm. That's right. Most definitely. You always got to be prepared. I mean, this is probably the biggest purchase in someone's life, and preparing for it is crucial. I'm like you, I've worked with people for a year, 2 years to get them there, and whatever it takes, if people are willing to put in that work and follow the plan I give them, then hey, I'm willing to stick by them all the way and help them to get to that point of moving in their house.
Okay.
Mhm.
Yep, and you've helped several of my clients before.
Yes, ma'am. Yes,
Yeah,
ma'am. We
great
work well together, and we've been working together for a while now. So, yes, me and you have got some people into houses that otherwise may not have gotten there.
Mhm. Yep, absolutely. So, anyways, well, let's get this wrapped up and hope everybody has a fantastic weekend. Um, if you're catching the replay or whatever, you can leave comments. And of course, like I said, you can reach out to us, and there's our phone numbers, and we'll be more than happy to help.
Yes, ma'am. Thank you, Amy. I appreciate
All right.
it.
Thank you. Have a good weekend.
You too. Bye bye.
Bye.